top business stories live from the Sky News City studio. A blow for the Chancellor as borrowing comes in higher than expected, but business activity is on the rise. The FTSE 100 continues to rally, hitting another all-time high today. Plus, the chief executive of tinyBuild on how a tough year for the gaming industry has dragged the developer and publisher into the red. Good afternoon. This is Business Live with me, Ian King. Government borrowing was higher than expected in the last financial year, casting doubt on the Chancellor Jeremy Hunt's ability to cut taxes again ahead of the general election. The Treasury borrowed £120.7 billion in the last financial year, according to provisional estimates published today from the Office for National Statistics. Well, that was down £7.6 billion from the 2022 to 2023 financial year, but it was £6.6 billion higher than the Office for Budget Responsibility was forecasting only a month ago. Well, separately, there was brighter news for the Chancellor, with a closely followed survey suggesting business activity hit an 11-month high this month. The Flash Composite Purchasing Managers Index survey, in which anything above 50 represents growth and anything below that a contraction, had a reading of 54.0, up from 52.8 in March and better than expected. Well, separately, grocery price inflation has fallen this month to its lowest level since November 2021, it emerged today. The latest data from the analytics provider Kantar suggests grocery price inflation fell to 3.2% over the 4 weeks to the 14th of April, representing the 14th consecutive monthly fall. Well, Kantar said the decline was helped by a big rise in promotions over the Easter period, with items bought on offer making up 29.3% of supermarket sales, which was the highest level outside Christmas since June 2021. Among individual retailers, both Tesco and Sainsbury's continue to raise their market share, with Morrisons holding steady, while Asda and Aldi both lost market share. Some other business news stories for you now. And JD Sports is buying the US sports fashion retailer Hibbett for just under $1.1 billion. The deal is the latest in a string of US acquisitions by JD Sports that began with its takeover in 2018 of the sports retailer Finish Line. Since then, it's expanded in the United States to more than 1,200 sites. Well, Hibbett, which is based in Birmingham, Alabama, has 1,169 stores across 36 US states, selling brands such as Adidas, Nike and Jordan. Shares of Associated British Foods have surged by more than 9% today after the owner of Primark said it was on track to deliver significant growth in both profitability and cash generation ahead of expectations. AB Foods was reporting an operating profit of £501 million for Primark for the 24 weeks to the 2nd of March, which was up 45% on the same period last year. Its grocery arm, which owns brands including Twinings Tea, Ovaltine, Ryvita and Dorset cereals, raised operating profits by 34% to £219 million during the same period. Taylor Wimpey warned today that its order book was smaller than it was at this point last year and said it's booked fewer sales so far this year. The house builder said that as of Sunday, its order book stood at £2.1 billion, which was down from £2.4 billion a year ago, representing 7,686 homes, which was down from 8,576 homes this time a year ago. Well, the company said it remained focused on prioritising value over volume, building a strong order book and positioning itself for growth from 2025, assuming supportive market conditions. The shares have risen by 0.5%. Now, the UK's biggest gym operator said today it's gone above 2 million members for the first time. PureGym was reporting underlying earnings of £132.2 million for 2023, which was up 39% on 2022. The company, which now has more than 600 gyms in 6 countries, is targeting between 60 and 70 new sites this year. I've been speaking with the chief executive, Humphrey Cobbold.
Well, there are two main sources of new members. Look, we're continuing to develop the existing estate that has been open for a while, and we've seen some progression in that as we continue to recover from the pandemic. But we've been opening some new sites as well, and I'm pleased to say we've opened them in great locations with good teams running them, and we've seen really good growth in those new sites as well. So a combination of both those factors.
Now, gym visits are back to pre-pandemic levels. Are you surprised it's taken this long?
Well, look, clearly I would have liked it to have been a little bit quicker than it has been. But look, I understand that it takes people time to reacquire habits they had before and adapt to what's been a pretty big change overall in people's lives. The way working weeks have changed and how people spend their time has altered. So with the benefit of hindsight, maybe, it's understandable that it's taken the time that it has.
Average revenue per member was up. Does that mean you've raised fees?
We've raised prices selectively and a little bit, well below the rate of inflation. We haven't been immune from the inflationary costs that have plagued other sectors and other businesses. So we've had to adapt and change a little bit in terms of prices. And yes, they've moved up a little. But I think we still strike a great balance in terms of value, £25 a month. If you're going to go 10 times a month as a consumer to one of our gyms, you're paying about the same price per visit as a cup of coffee. And I think that's a pretty good price for a workout and the range of facilities that we offer people. So we haven't had too many people complaining on that front. I think we continue to offer great value, and that's a part of what's supported the member numbers and our continued progress.
I mean, I know from the statement that energy costs, you actually managed to bring them down over the course of the year. So I'm assuming most of the inflation you're seeing is in staffing.
Well, it's a range of costs. Look, every supplier who we deal with in every area of the business, and there are probably 400 or 500 of them in total for a business of our size, Ian, everybody comes in asking for a price increase at a time like this over the last 12 to 15 months. So we've had to be really good in working with them to limit those price rises, to give them the advantage of the growth that we're seeing, and manage that carefully. But yes, we have seen some increase in wage rates for people. That seems right and proper. I'm actually supportive of some of those increases because I want to see the people who work for us earning a decent living and being able to afford a decent standard of life for themselves.
You've obviously thrived during the cost of living crisis. What happens now that real incomes are rising again?
Well, look, I think there are two things that I'd observe in consumers at the moment, from our business point of view, is that the importance of value for money, I think, is lodged in people's minds. That's not just a cost of living piece. I think people want good value for money, and we intend to continue to provide that. And the other thing is clearly the priority that people are increasingly attracting or attaching to health and well-being, physical and mental. And I don't see that changing in a hurry either. People know that they want to look after themselves. And so I think we're well set. I certainly believe we're well set domestically in the UK and elsewhere where we operate across Europe in order to continue to grow and develop over the coming years. And that's certainly what we're going to be looking to deploy our resources to do.
Now, you're targeting an additional 200 gyms across the UK and Switzerland over the next 3 to 4 years. Isn't there a danger that you start cannibalising membership of existing sites?
Well, look, around the edges, that's a good point, Ian. You do inevitably cannibalise a little bit, but if we don't open a good quality gym in those areas, then somebody else will do. So my attitude is that as long as we do it in a careful and measured way, we're always better expanding ourselves than leaving people room to do so. And certainly what we've found to date is the quality of what we're putting into markets, the way that we can flex the capacity, the amount of square footage that we can put down in any market. That allows us to continue to open good sites. The performance of the sites we've opened most recently have been really very strong. And I see lots and lots of opportunity in the UK and Switzerland and some other markets, actually, for us to continue to expand. We'll do that carefully and we'll make sure we maintain our good returns on invested capital. But I'm very optimistic about our ability to continue to do that.
Yeah, you mentioned in the statement you're seeking new franchise partners in the US and elsewhere. Which are the big target markets for you that you're not currently in?
Well, look, we've got a very small position in the US currently where we have 3 of our own and operated sites, and that's a platform we'd very much like to expand from. The US is the largest fitness market in the world. It's also the largest market for franchising in the world. And I think a sort of British proposition like ours still carries some good weight in that market. I'm actually out there next week, in fact, talking to some potential future partners. So that's a key focus. Middle East and Asia also looks very interesting. We've got a good foothold in the Middle East and good progression there. So we're looking for further partners as we look out towards Asia. And I wouldn't rule out some opportunities in Europe. We're looking at a couple of interesting things in Europe too. So plenty of work to keep us going there.
Now, last year was a tough one for the gaming industry, and particular for tinyBuild, the video games publisher and developer behind hit titles such as Hello Neighbour. Well, it was forced to close versus Evil during the year, a rival that it bought just 2 years earlier. And that dragged the Seattle-based company to a full-year pre-tax loss of $63.5 million for 2023, compared with a profit of $16 million in 2022. I've been speaking with Alex Nichiporshik. He's tinyBuild's chief executive.
I'm always an optimist. So what I believe has happened over the past few months is we have seen some smaller budget games take off and absolutely catch the world on fire, like Helldivers or Pal World, that are making sales comparable to AAA level sales. So I do see the light at the end of the tunnel. The games industry is very resilient.
Now, obviously, these results for you are blighted by the fact that you had to close versus Evil just before Christmas. What do you think you've learned from that whole experience?
I think the biggest takeaway is for us, the mergers and acquisitions we have done that worked are with people we had an established working relationship with. The craze of M&A during the pandemic in games was a little bit too crazy, so that was a very expensive lesson learned.
You are obviously undergoing cost-cutting measures now. What sort of numbers of jobs are at risk?
Unfortunately, we did have to make some very tough decisions in terms of cost cutting. Right now, we feel confident in our publishing, marketing, and development teams, and we are moving forward. Right now, I'd say we are in the leanest and meanest position we've ever been in terms of headcount.
Obviously, you have some pretty ambitious plans in terms of the number of hours of gameplay that you're looking to develop. Can you do that on a budget that is somewhat more constrained than some of your larger competitors?
Absolutely. The best games in our portfolio over the past 12 years have been the ones that are smaller budget and also result in thousands of hours. And I am not joking when I say thousands, not hundreds, but thousands. In fact, our very first game that we launched as a publishing label, Speedrunners, way back in 2013, we have hundreds upon hundreds of players that have, oh, I played this game for 3,500 hours. And you do the math on the amount of days and go, yeah, that's pretty crazy. And that was a very modest budget.
What kind of things are gamers looking for here and now in 2024? Have the sort of things they're after changed over the last few years?
I think the major change we have seen is that we're not competing for playtime. We're competing for time, period, right? We're competing with Netflix. We're competing with sleep, with everything. So I think the key here is how do you develop something that is easily accessible and that really captivates you and becomes a daily habit, essentially, right? So that instead of watching TV or doing X, Y, and Z or eating or sleeping, you decide to continue playing our games. I think those are the ones that continue to get a lot of traction years after they launch initially.
Has the profile of the typical gamer changed much over the last few years in your view?
I think what the pandemic has done is it showed a lot of people that may have not known they're gamers, that they are. And once you start playing, you don't stop. So I think games are for everyone today. What we're doing is we're targeting more like from the younger gamer until mid-30s. And a lot of our games are more like family experiences where you can play it with your kids.
You've spent something like $36 million on development advances. What kind of payback are you looking for on that and over what period of time?
I can't comment on ROI that we are forward-looking to. What I can say is that historically, most of our games have done at least a 2x return within their first year. But we did do a whole bunch of write-offs on our development spend. Because what we did is we went and invested into several different types of games. And now, at the end of last year, we have refocused on what works for us.
Now, as part of the recent fundraising, you took your stake up to 58%. Is this logically a business that you might want to take private at some point?
I can't comment on that.
But when one shareholder is so predominant on the shareholder register, that might logically appear to be the end game.
Again, I can't comment on it. What I can say is that I'm confident in the business, and that's why I was willing to support it with my own funds.
Well, I didn't get any joy from out of that one, but I can tell you that the rather engaging footage with the homicidal duck is from a forthcoming release called Duckside. Do look out for that if you can. Well, still to come here on Business Live. We'll have a look at how the markets are doing this afternoon. Stay with us.
The sewage problem is huge, but it's also a massive problem with plastic pollution as well. But yeah, the sewage problem in the UK is pretty horrific. I think the plastic problem is definitely getting worse. We're definitely noticing it more and more. I often hit plastic in the water when I'm windsurfing. You see quite a lot of it, from crisp packets to plastic bags to big plastic containers. And that's global. That's not just a UK problem, it's everywhere. When we're racing, you can hit stuff in the water and you stop instantly. So you go from 35 miles an hour to 0, and that causes injuries. It ends your race. You can lose world titles over it. I've had friends that have lost world titles off the back of hitting plastic in the water, and that's just not fair. In terms of the sewage pollution, I've had to go abroad for training. It's almost impossible. If you think about every day that it's windy in the UK, almost, it's raining, and that's when they can discharge sewage in the storm overflows. So for it to be safe to go in the water, it's so rare that we can have good enough conditions and for it to be safe. In the UK, we have a good monitoring system, so you can at least tell through the Surfers Against Sewage app whether it's possible to go in the water or safe to go in the water. But invariably, it's not ideal. The situation here is really, really terrible. I'm actually having a year off from competition.
Okay.
But I am coming back next year in a new discipline, and so I'm training for that.
Can you tell me?
Yeah, so I've been a racer for my whole life, and now I'm moving into waves. So racing is about going as fast as possible, 8 people on the race course at the same time, no rules, and the first person over the finish line wins. And now I'm moving more into wave sailing, where it's all about using the waves to surf and then using them as a ramp to jump off.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better.
Well, European stocks have enjoyed another positive session this afternoon. Here's how they finished in continental Europe. All the main indices in positive territory. Sentiment has been supported by the latest flash purchasing managers index survey data from the Eurozone. The big talking point today in corporate Europe is Novartis. The Swiss drugs giant has risen by 2.5% in Zurich after its quarterly results beat expectations. If you're watching our morning programme, you'd have had some analysis on that. Well, here in London, look at that. The FTSE 100 has hit an all-time closing high for the second day in a row, up 0.25%. It did hit an intraday high earlier on of 76.52, some 24 minutes after the open first thing this morning, giving back some of those gains, but as I say, that is another all-time closing high for the FTSE 100. In percentage terms, well, the leading gainer is Associated British Foods. Mentioned them early in the programme. That's finished up 9% on its results. Meanwhile, JD Sports Fashion, that acquisition it announced earlier today, has gone down quite well. JD Sports finishing 3.75% to the good. To the downside, all of the mining heavyweights are lower. That's on the back of lower metals prices. Outside the FTSE 100, some interesting moves to mention there, not least Peters Hill Partners, a company I wrote about for our website some time ago. Well, that's surged 10% today on news of $100 million return of capital to shareholders. While International Distribution Services, that of course is the parent of Royal Mail, that's risen by some 3% as investors await fresh takeover developments. To the downside, Jupiter Asset Management, I'm afraid they're off 6.5%. That's on reporting further outflows this afternoon. Meanwhile, over on Wall Street, all of the main indices have opened to the upside. As you can see, the Nasdaq currently 1.5% to the good just now. General Motors is among the major talking points today. That has risen by 4.25% on better than expected quarterly results. Meanwhile, GE Aerospace is up by some 6% for similar reasons. Over on the foreign exchange market, well, the big story there has been the Japanese yen. The euro today hit its highest level against the currency since 2008. The Japanese finance minister has been indicating it could intervene to defend the currency. Meanwhile, sterling has rallied. It was in the doldrums earlier on today. It's up 0.75% nearly right now against the dollar, up 1/3% against the euro. The single currency, meanwhile, up 1/3% against the greenback. Sterling strength, I think you put that down to the PMI data to which I referred earlier in the programme. Meanwhile, after falling in 5 of the last 6 sessions, the oil price has rallied today. A barrel of Brent crude will currently set you back $87.60 a barrel. That is up nearly 0.75% on the session. Joining me this afternoon is Janet Mui. She's head of market analysis at RBC Brewin Dolphin. Janet, great to see you. Obviously, we're in the throes of earnings season in the US right now. Tesla report tonight. What are you looking out for?
Yeah, good afternoon. Thanks for having me. I think, Tesla has a strain of bad news and sending its share price sharply down. It is down, I think, 40% year to date. The second worst stock performance in the S&P 500. So I think analysts are looking for any catalyst for that stock price, and it has to be the corporate strategy because it has been quite confusing so far. I mean, there are rumors that there will be a robotaxi announcement coming, and there could be a cheaper EV model. But I think analysts are looking for more developments, more stories on artificial intelligence, how that is going to fit into the future profits, etc. Because the thing is, the current series of models is not doing very well, and there has not been any new products or models coming through as of late. So I think investors will be really scrutinizing, and in fact, they have been lowering the expectations a lot already. So we have to see if all these bad news have already been priced in.
Really good point you make there, Janet. I mean, one wonders whether Elon Musk actually dropped the ball a couple of years ago, because as you say, they were going to launch a new low-cost model, have pulled away from that. It seems that he's put all of his R&D eggs, if you like, into the autonomous vehicles basket, and maybe he should have been trying to produce a low-cost model all along.
Yeah, I think that's the confusing part. I think another cheaper model would be quite welcoming to add to his fleet of offerings. But I think for Elon Musk's vision, the autonomous driving is really the key there, and that's where his vision of the future lies. Because the thing is, Tesla actually, the advantage is they have got a lot of these driving data, which probably is putting at a very big competitive advantage over its competitor. So I think that's the key point. How do you translate all these data into real autonomous driving experience? It is still likely to be quite far away, given they're likely to be testing, regulation, etc. So I think investors will be very keen to hear what is the strategy and progress that is going to be. So yeah, that would be key, I think.
Now, on a macro side of things, we've had the PMI data, flash PMI data across the world today. What are your big takeaways from there? I mean, it certainly looked pretty positive for here in the UK.
Well, on aggregate, it is positive because the services sector has been expanding at a faster pace in April. That is actually the case across Japan and the Euro area as well, which is great because these economies depend a lot on services, right? But on the flip side, actually, the manufacturing sector flipped back into contraction, which maybe it is a blip only because so far there has been good recovery, but we'll see. But on aggregate, it is good. In the US, actually, the data is slightly easing off a bit, but actually that may not be bad news because I think the worry is that the economy is just too hot there. So a bit of easing in the data was actually a bit welcomed by financial markets.
OK, Janet, have to leave it there, I'm afraid. Great to see you this afternoon. Thank you. That's it from me. I'm back at 11:30 tomorrow morning. Hope to see you then with our next edition. Coming up next, it's Mark Austin with the News Hour. We are expecting more words from Rishi Sunak and Donald Tusk any moment now. Do stay tuned for that. See you tomorrow. Thanks for joining me today. Cheerio.